मॉर्निंग रिपोर्ट में है ना, अभी थोड़ा इसको थोड़ा सा लेट आऊंगा। मैं आ गया ऑन टाइम, कितने बनाना स्टार्ट।
सर ये प्लान सेटअप कर रहे हैं, उसमें से कुछ चलता है अभी शेड्यूल के अंदर कुछ आता है दूसरे डिपार्टमेंट में जाके बैठे हैं
जो आगे है तो मिल नहीं मालूम
सर।
इन लोग में ऐसा होएगा, मेरे को नहीं समझ में आता है। नहीं सर, ये हर में
आई वाज रेडी टू मेक द रिपोर्ट। मैंने आज इसके पीछे भी कर दी थी। आई वाज रेडी फॉर द कॉन्फ्रेंस कॉल।
क्या हो गया?
नहीं करी कॉन्फ्रेंस कॉल मेरा ये तो मुझे सेटअप करता है।
आओ वापस आओ तो खत्म हो जाएगा। हेलो ओ सॉरी।
Yeah, good morning, everyone, and sorry for this disturbance. We are seeing some corrections in the international market, mainly driven by the increase in the bond yield in the US market. Yesterday, 10-year bond yield has increased by almost around 12 basis points. Post the comment of the regional Fed chief of different of two regions that the economy continue to remain strong and employment is also strong. So inflation may not come off as expected by the Fed. As such, the interest rate decline may not be very drastic. So, which has led to increase in the bond yield, and that has had an impact on most of the market also. So we are seeing some corrections across the board. Even in the commodity also, we are seeing some corrections wherein uh, iron ore and steel are down by around 1.5%. If we talk about aluminum from yesterday, same closing of Indian equity market, it is down by around 1% and copper by 1.5%. So what we see that uh, we are consistently underperforming the international market mainly on account of the uh, poor performance in the results in this quarter, which is continuing for some time. I feel this trend can continue for some time, but over a period in few days or maybe by the month end, things will start turning around and market will start capturing the expectations of third quarter and fourth quarter where things can start improving. So today we may see we may be along with the international market, and since we had come off a lot, so quite possible that we may remain range bound against the world market decline. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the Nifty is likely to open on a flattish note, and we are likely to witness some sideways momentum during the day. Yesterday, we have seen that the Nifty was facing a very strong resistance of 25,000 psychological mark and closed below that level, which gives some sort of a cautious sign going ahead. Now, for a today intraday purpose, the immediate resistance is placed around 24,820. If Nifty surpasses that level, then 24,940, 25,100 levels can be seen. Whereas the support is placed at around, immediate support is placed at around 24,700. Any move below that level, 24,570 can be seen. Coming towards the Bank Nifty, yesterday Bank Nifty has shown a very strong rally, but on the closing basis, it closed below 52,200 levels, which is a very cautious indications on the technical front. 52,200 is the immediate resistance level. Any move above that level will only witness some positive momentums towards 52,500, 52,900. Whereas the support is placed at around 51,700, 51,500 levels. Coming towards the Fin Nifty, 24,020 is the immediate resistance level. About that level, 24,140. 24,330 levels can be seen, whereas the support is placed at around 23,840 and 23,700 levels. So the overall view on the market setup is a little bit cautious. Try to avoid the major long positions, but definitely it's a stock specific market, so one can concentrate on the stock specific trading rather than Nifty and bank Nifty as such. That's it from my end. I request Derivative team to take the call forward.
Yeah, thank you, Swati. On the derivative front, see, basically, there are first signs of a likely bounce back in Nifty. Why? Because the cost of carry after a long time, which was, around that 200 mark, 180, 195 odd mark, and that has come down to 7. And this is a very good thing for the markets, because this is what actually we were waiting for. So that does suggest that some amount of bounce back can come in. Along with that, if you see, the previous low of Nifty is around 24,700 on the spot, and that was not broken yesterday. So likely we might see, some buying coming in now, which can take the index towards the 25,000 levels. Another very important thing happened yesterday. A lot of call built up was seen around 24,700, 800, 900, 25,000 strike calls, and that happened with an increase in VIX. That means buying has happened, and that is also a very good sign, because if the calls have been bought by the stronger players, that means they expect Nifty to move up from current levels. So definitely a lot of good signs for Nifty. I would expect Nifty to bounce back from here at least up to the 25,000 mark. So look out for the same. From the stock specific front, I think most of the sectors and stocks will witness short covering action, and this short covering action should stay in for the next couple of days at least. So yeah, best bet would be the banks. We have seen a lot of shorts in the last 2-3 months which have started to cover much earlier, and we expect HDFC Bank, IndusInd, Kotak, which have seen good selling pressure in the last 2-3 days, to now move up from here, which can take the overall bank Nifty higher as well. Along with them, the autos, which were actually, seen a lot of selling in the last 2-3 days, they can also come up. So yeah, Hero Motors, M&M can do well. Bajaj Auto can do well from here. So yeah, that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Rosari Biotech hosted the con call yesterday. In the con call, the management highlighted the reasons behind the moderate revenue growth of 3.1%. In HPPC segment grew by just 6%, mainly due to flat growth in home care segment and unavailability of ethylene oxide that impacted the portfolio, which accounts for 70% of the HPPC revenue. In textiles, domestic volumes were up. However, there were issues in the Bangladesh and Egypt, which observed the volume decline by 5%. That impacted the international volume growth. The management expects recovery in volumes of Bangladesh by Q3 end. In animal health nutrition business, it expects volume to pick up, led by additives. Exports business grew by 32% in first half and 20% in Q2. This was led by new client additions in both existing as well as new regions. EBITDA margin was stable at 13.2%, mainly impacted by higher freight forwarding costs and professional fees paid towards restructuring of the global business. Also, it has seen the fresh hiring. The management has maintained its margin guidance of 12 to 14% for FY25. Also, the new client acquisition in the export market has come with the effect of cost of margin initially, where the Rosari is going to burden the freight costs. Currently the stock is trading at a PE of 24 times to FY26 EPS, while our near-term outlook remains neutral, as stable margins are there and there is limited opportunity to expand in the margins. However, company's expansion projects of ethoxylation and expansion at the Dahej plant are expected to commissioned in a phased manner, and can increase the volume growth from FY26. So one can invest at current level with the long-term horizon. On the result front, Supreme Petrochem Limited posted the results and results are declining. Revenue grew by 17.8% on a YY basis, where the volume growth remained flat for the quarter. EBITDA margin reported at 8.3%, which is stable, and the stock is trading at a PE of 36 times to TTM EPS. We'll provide the update post the con call. Thank you.
Good morning, everyone. Yesterday, Ultratech came up with the results. The sale results were below expectations. Sales volume came at 27.84 million ton versus expectation of 27.34. They were down quarter on quarter due to lower demand due to elections and monsoons. EBITDA per ton came at 724 versus expectation of 906.29. EBITDA per ton was lower quarter on quarter due to lower realizations, increase in power, raw material, and other cost, which was partly offset by decrease in logistics and fuel cost. Revenue degrew quarter on quarter by 13.5% and 2.4% year on year. EBITDA degrew 33.6% quarter on quarter or 20.9% year on year. Margins came at 12.9% versus expectation of 15.4%. Quarter on quarter, it was 16.8%. We also attended the con call. In the con call, the management said that good monsoons will lead to good rural demand going forward. Urban housing, infra, commercial sectors are expected to do well. Fuel cost is expected to come down going forward. Another 8 million ton capacity will be commissioned in H2. Total capacity by the end of FY25 will be 159 million ton and 184 million ton by FY27. These capacities exclude current as well as future acquisitions. Kesoram transactions will be completed in Q4 FY25. India Cement transaction is at CCI approval. Post that, the company will launch an open offer. Company expects cement prices to improve going forward. Company expects double-digit growth, broad-based recovery, and better profitability in H2. And the company said that the steady buildup has been seen in the first 20 days of October, but October will be a slow month because of the festive season. November and December is expected to have a buoyant demand. The stock is currently trading at EV to EBITDA of 17.2 times, but due to the below expected results as well as the management commentary of improving H2, we are currently neutral on the stock. Thank you.
Good morning. Today one IPO will be listing. The name of the company is Hyundai Motor India Limited. We have given neutral rating to the IPO. Details of the IPO are like issue size is around 27,870 crore, comprisingly entirely of offer for sale. Market cap post issue will be 1,59,258 crore. Talking about the company, Hyundai Motor India Limited, part of the Hyundai Motor Group, is the second largest passenger vehicle OEM in India since 2009 and was the third largest global OEM by sales in 2023. Its product range includes 13 models across segments like sedan, hatchback, SUVs, and EVs. Companies focus on premium vehicles and expansion into EV market offers future growth potential. In the peer comparison, we primarily compared Hyundai Motor India with Maruti Suzuki. Hyundai Motors revenue for FY24 is significantly lower than Maruti Suzuki's revenue. However, Hyundai's asset turnover ratio of 2.7 times is higher than Maruti Suzuki's 1.7 times, indicating more efficient asset utilization. Hyundai's revenue CAGR of 13% is also lower than Maruti Suzuki's 17%, showing slower growth. While Hyundai's PE ratio of 26.3 is slightly lower than Maruti Suzuki's 29.9, but it does not offer much of discount, suggesting the stock is already fully priced. Additionally, the parent company focus is divided between its two companies, Hyundai Motor India and Kia. Kia is perceived as a superior brand, which could impact the future growth of Hyundai Motor India. So, given these factors, we have given neutral rating to the issue. Thank you.
Yeah, Bajaj Housing Finance reported numbers and the numbers were okay. The NII grew by 13% year on year. whereas PBP grew by 20%, provision remained under control, and PAT grew by 21%. AUM grew by 26%, and gross and net assets all were under control and in very low decimals. The only concern is valuation. The stock is still overpriced with price to book of 6.1 times and PE of 61 for trailing 4 quarters EPS. So valuations are costly, otherwise results were okay. Then HFCL has reported the numbers, and the numbers again came below expectation or declining. Mainly the management has guided for much higher growth for the year, but 2 quarters were having a lower or a negligible growth. So to catch up in the second half will be quite difficult. So as such, the growth which the company has guided has to be toned down. The EBITDA margin also was a bit lower than last quarter, though higher year on year at 14.5%. The stock is still trading at around 48 times trailing earnings, which looks fairly priced. So that's all from us. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are witnessing a gap of opening in gold and silver. However, one should buy on dips around 78,000 in silver. More of it is having a support area at 77,800. So one can initiate a buy on dips, and on upside again, the important resistance area would be 78,500. So if it doesn't breach that level, then we might see some profit taking again, which may lead to 78,000, 77,800 on downside. Similarly, silver also expecting to test 97,300 to 200 levels on downside. Prices are supportive at 96,500. And on upside again, the immediate resistance is at 99,000. In metals, yesterday we had seen a correction. The prices, if are holding above 814, then we might see some pullback till 820, 822, 824, whereby again some profit taking is expected. So traders can sell around 826 with a stop loss of 830. And in zinc, we might see a pullback till 287 to 88, whereby again some selling pressure is expected. So for trading, one can sell around 288 with a stop loss of 290. Crude oil prices should pull back and again test 59,76,000 on the upside. So buying around 59,000 with a stop loss of 59.30 is recommended. And in natural gas, we might see some pullback till 205, 210. So buying around 195 with a stop loss of 188 is recommended. That's it from us. Thank you very much.